Hello and welcome to LedgerCast. My name is Brian Krogsgaard. I'm here with Josh Olsowich. Hey, Josh.
Hey, Mr. Brian. How's it going?
I am doing well. Hey, you know what? I'm really excited.
Tornado season? Are you in Tornado Alley, or is it just like, it's weird, right?
Yes, I am feeling quite thankful. I'll be honest. I am very appreciative that I am safe. It was like recording up only and also in a tornado warning at the same time yesterday. And that was not just tornado warning as in the market goes only down whenever we record up only. Actual tornadoes outside.
Yeah.
But you know what? We don't have tornadoes today. We have the opportunity to use the greatest DEX on the planet, an aggregator with deep liquidity, because they pull from Uniswap. They pull from SushiSwap, Bancor, Kyber, all the places you may want to trade. You can do it right there on Matcha. You go to ledgerstatus.com/Matcha. You can set your max slippage, use all the exchanges. Matcha is always going to find the best price, no matter where that liquidity exists, at ledgerstatus.com/Matcha. They are a great partner. I've made some Matcha trades today. The gas was very expensive. But you know what? I had custody of my coins no matter what. And I get that through Matcha. Get great liquidity through their platform. And, you know, Uniswap 3.0 was announced. And guess what's going to be able to take advantage of Uniswap 3.0? Matcha. That's right. They're our partner. Go to ledgerstatus.com/Matcha. If you've not made a DEX trade today, you can do it. Now supporting Binance Smart Chain as well. You can trade PancakeSwap and all the BSC stuff through Matcha. Here's why you need to do that. You just do your approvals once on Matcha, and then you get all those pancake pools and Bitburgers and whatever else they do over there at the Binance Smart Chain.
This is the longest ad I've ever heard in my life.
It's not just an ad. It is a adoration. It's not an ad. Mm-hmm. It's adoration.
I thought you were going to say like liquidity vortex, like tornado on the theme, but it just wasn't there.
Sorry. Josh, how are you doing?
Good. I mean, people are talking about two things. They're talking about the ship, and they're talking about the CME futures options rollover.
Yeah.
We just finished the Deribit rollover last night, 4 a.m. EST. And in and around that time, we started a little pumperoni here.
Well, max pain was 44K or 44K. We did some analysis on Weekly Open. Go to weeklyopen.com to subscribe. And we talked about how, like, from our view, there was a big put strike at 40K for that open interest. So it wasn't going to get to 40K. They can't be in the money. But really, the max pain, like, it was much more level, really all the way to, like, 58K or something like that. So to me, it was like pretty arbitrary where the actual max pain existed, but the lower you go towards 44K, it seemed like the better for max pain. So it all kind of expired in a way to make sense of that to me. Obviously, we are seeing the impacts of open interest on the market, though, right? Like options open interest.
Yeah, for sure. This is a hidden website that took me a while to re-find after I found it the first time, but this is the...
We've got a chart emergency.
Yeah, there's a chart crime being committed as we speak. I'm not an options guy, but like you were saying, there's still a bunch of puts at 40K, and there's a bunch of calls at 80K.
Yeah.
I don't know how else to read this. But
those puts. What's the date on those 40K puts? I thought most of those rolled off last night.
Looks like April 16th.
Okay,
well, actually, no, it doesn't tell me.
Yeah, but what you generally look at. Let's talk about how you analyze open interest on options. Generally, you're looking at a combination of strikes and open interest, meaning volume. So there's 12.5 thousand puts at that 40K price. So for those puts to be in the money, it has to go down to 40,000. So they make nothing if it doesn't go to 40,000. So pain for them is for them not to actually be in the money. On the top side, $80,000 for them to hit in the money. The price has to go to $80,000. There's about 8K calls on that side. So the price has to go above that for them to be in the money. The likelihood is when you look at these like big spikes, you're not going to get either to them because you're going to assume the sellers are going to win. Unless there's so much to pull it one direction or the other that purely hedging is going to require them to kind of bet against themselves. Like there creates this momentum, and that's when there's this gamma trade that exists. What this tells me is that likelihood is we don't get to either 40 or 80. Of course, that is a $40,000 range, so it's not particularly useful. But when you can start to combine where are these concentrated call or put strikes in combination with when are they dated, you can start to see some more interesting things. Inside these bounds, like 48 and 50K are pretty heavy put strikes, and 60 and 64K are pretty heavy call strikes. My guess is there may be a different balance on the dates on those. And as you become more of a wizard at reading this stuff, you might be able to get some alpha on where price might go in reflection of where the open interest exists and where the open interest expires. If you scroll down a little bit, Josh, there's a window for, so what this chart says, this is open interest by expiration. And this basically says April 2nd, April 9th, April 16th, not near as many calls and puts expiring. But April 30th and then June 25th, there's a lot of options open interest. So the price will probably kind of magnetize itself towards those dates as dates to watch. Just like yesterday that we had a big roll-off, right? March 26th.
Oh, yeah, today.
Well, last
night.
Night, the middle of the night, like 2 a.m.
Yeah.
So that's what you look at. We just had a big roll-off of open interest. You kind of wiggle to a place where it's the least painful, typically, for the sellers of those options, most painful for the premium buyers. And now we're opened up for a bit of a move. So everybody just kind of waits as you have these large open interest expiries, and then the price is allowed to move forward after that. Well, when it matters a little less.
I think it was a total between ETH and BTC. It was 5 billion notional futures and options volume. So it was quite substantial. That was just Deribit, by the way.
Yeah. I mean, Deribit's, they really own this market.
Yeah.
Like CME's big, but Deribit's like really big.
I'm sad that I can't trade options anywhere other than CME, right?
Me too. Yeah, we'd have to go to CME. And I've never even looked into what I need to do to trade on CME. It just feels like Boomer Town. Like, why do I want to go there?
Yeah. This is the ETH put call levels. What are we at? 1650?
Yeah.
And looks like there's a bunch of calls.
A lot of calls up to like 2,800 to 5K.
Yeah.
Which is very interesting because that could create enough like of those gamma effects like we talked about. There's just so much money drawing at that direction that the options sellers have to hedge with futures, and then essentially they're pushing the price up the more people put calls on these expiries. What if you scroll down again? Let's see what date is the most popular expiry. So yeah, June 25th. So maybe someone's concentrated a lot of call volume for a late June ETH pump to 5K, and that could be the type of thing where you hint at movement. Of course, I'll still lose the bet and have to buy you steak, but maybe we'll have it in June when it actually goes to my price.
Maybe. Look at this volatility just drop off. It's still high.
So
still high-ish, but
so historical we're just going to talk options for a minute. Historical volatility, there's realized volatility and implied volatility. Realized volatility is this historical volatility. What is the actual expected volatility over the course of the month, which is going down 70% or so. The implied volatility is affecting what actually the options actually cost. What happened recently with Bitcoin is for the first time in quite a while, like since it was at 10K or so, the the realized historical volatility went below the the implied volatility went below the realized volatility. There was a flip. But basically, it's going to enable if the IV is lower than the actual volatility, then being long options can be more attractive, because essentially you're getting priced based on the implied volatility, and the realized volatility is higher, or you expect it to go higher, and it allows you to get an attractive long premium price to make options worth trading. Because if the implied volatility is real high, it means that it's priced as if it's going to be very volatile. So then if the actual historical volatility continues to go down, you're paying too much for the option, for the price of that option. And that means for people like me, Retail Joe, that just wants to buy some calls on CME because I think ETH is going to 50K, because I think ETH is going to 5K, Freudian slip there. I want to wait, personally, not financial advice, I want to wait until implied volatility is way down, which is also pretty much going to mean actual volatility has also been going down. And I essentially want to predict when I think volatility is going to actually start going up, but the implied volatility is going down because it's derivative of historical volatility. So after a long consolidation, you would expect volatility. So the best time to be long volatility is after that long consolidation. So when you can bring the magic together of charts and understanding options, you can anticipate future volatility despite current very low volatility. And that is kind of your sweet spot of when to buy long options. Josh, did I lose most of our audience just now?
No, for me, I've never been able to understand most things unless it's like practical and I'm actually doing it. I gotta say though, I finally know like puts and calls because of the GME stuff. Like that's what really cemented it for me. I've never been able to remember put call and like what's what, but once
you trade them, it's pretty easy. And when you put this in practice, let's use ETH as our example. It hit 2,000 on February 18th, and it hit 1280 on February 28th. So we framed in a high and a low, and we've been inside of that range ever since. The longer we go into that consolidation, the more it's going to just create anticipation for volatility. Bollinger Bands tell us a very similar story. The Bollinger Bands are going to narrow as the actual historical volatility reduces, and that's going to make us anticipate future volatility. In my mind, this creates an opportunity for some alpha, because the market isn't looking at that in the same way. The market's not saying like, oh, you know what, like these Bollinger Bands are so tight, this consolidation is so tight that we are going to start pricing these options up higher implied volatility because we know volatility is coming because we did the TA on this. They're just saying, look at the lagging 30-day historical volatility, therefore we can pull the prices of options down, and that's represented in the implied volatility. That creates a sweet spot for the trader to try to predict the oncoming volatility, because you're looking for consolidation and you're looking to see when it will expand. Now, what makes that hard is sometimes it just keeps freaking consolidating. So you like get in thinking like, oh yeah, it's about to expand, it's about to consolidate, we're about to go to 2,500 by the end of March, and then you lose the bet, right? My call option expired worthless, and now I owe Josh stake, or I will owe Josh stake.
Got a few days on that, but yeah.
The chat can let us know if this made any sense.
I do like your triangle on ETH. There was that. This was the risk of all this stuff playing out, like exaggerated. So we had this head and shoulders, this low volatility period consolidation. It broke down, it hit the spot. TA doesn't work, whatever, and it bounced from there. But the issue was like if it didn't bounce, then we were setting up for this, and then like we set up for a move down from there, and then it just like is a domino effect.
And then it's
right?
over.
And then it really is over. So
Nice knowing you, bull market.
Obviously don't want that, but that's what I was staring down the barrel of. Like, okay, like this is where it should stop, but if it doesn't, like comp, like AAVE, like some of these other ones that look absolutely atrocious. I haven't looked at comp today, but
well, pretty much everything's up like 6-8%, but they don't look bullish necessarily. Like they're partial retraces of the breakdowns.
I can't be bullish on that, right? Come on.
It's not ideal.
Like I'm looking at this thinking, okay,
yeah,
this is going to go to like 180, like this is not pretty.
I don't know. I think they'll end up following the broader market correlations. And to me,
this guy,
ETH was the one that needed to save the most, and it saved really like where it broke out of. It didn't quite wick into at 15.25, and that's where it bounced off of. And I tweeted about that, about asking how disgusting it was back when it was just the little pin bar, and got a bunch of bearish comments, and I was like, okay, so we're going up. Just from a sentiment perspective. So this ETH looks okay. Like it's not out of the woods. I want it to re-tackle the short-term moving averages. I want it to fill out this triangle, yada, yada, yada. But it's going in the right direction, and I don't think like if ETH stays okay, you're going to get big breakdowns in something like comp. Now, one I took a position in this today. Disclosure.
Uh-oh. Shill alert.
I wish I had a little. I have the lights for it. I can do it on the lights, but if anyone's epileptic, it'll hurt them. So Curve is. Like if there were options, like Curve would tell me to get long volatility because it's had really condensed price action that is attractive to me because it didn't get hit near as bad by the dumps. It's coiling below the long-term moving averages versus BTC. And for the first time, like similar to when it was like testing under the 20-day, back when I was talking about that in early January, but never made the trade. It's now doing that to the 200, retackled the 20, looking at the 200, and I think it's going to bust up above the 200 and have a nice little move in it, maybe a 50% or more move versus BTC. That's a trade I'm willing to be in, and it's a pretty clear breakdown because it's been in such a narrow range on both USD and BTC pairs. So I bought me some Curve. Yeah. And this is a significantly stronger picture than like what you just showed with comp as an example.
Oh yeah, it's different completely. Even Uniswap didn't. It was like a sell the news event, right? Like it didn't do anything.
Man, it was a total sell the news event. I was recording during it. My plan was to sell when the announcement happened. It went up 10 or 12% while we were talking to Parify Capital, and then like. By the time I got off, it was only up like 2% on the day. So I sold it anyway, took the hit, and then it dumped really hard. And I'm glad I did when I did.
I mean, I think it's still fine overall. Let me get back to ETH for a second. There's two things I was talking about yesterday that I'm concerned with. One is the 1050 cross on the daily. If you backtest the 1050 cross, it is
pretty good.
Highly, highly, highly profitable signal. So,
but how do you determine an actual confirmation on that? Like when it consolidated last year, like that.
If it crosses, right? If it crosses,
if the price crosses, or if the moving averages themselves cross.
I'm just looking at the moving averages here. Like you even got a great signal here, October 11th. Boom. We had a near cross on March 4th, and now it looks like we're definitely going to get a cross here on soon. I don't know, by the end of the month. If that doesn't cross, then I'll be more bullish. But
this kind of has the same effect of like the TK recross, right? Like when it crosses back, it's uber bullish.
Right.
That's what I view it as, more than crossing over being uber bearish. But
you can't short it in what's the word? Not expectation, but I wouldn't like pre-short this. I'm just like watching it. And the second thing that looks really bad is alligator fractal. That looks real bad. It did crisscross here a few days ago, again, March 4th, but right now this is saying stay out of ETH because this does not look good for the long side. Alligator is bearish. If we break 15.14, That'll be a short entry signal. Your stop loss is 1870 right now.
On a short.
So on a short, if you're short. And
this is the type of zone
this
where
is telling you to short. Let me just remind you. Previously, I had a token set. Shout out to them. Specifically for Alligator Fractal. And it was quite profitable. So, backtest this all you want, whatever anybody wants to do with that sort of thing. But all I'm saying is ETH is definitely less bullish than BTC is at this level. And ETH BTC is, again, how does anybody trade that chart? If you trade that chart, raise your hand for me, because it looks absolutely abysmal. I can't follow any signals. I know nothing about anything on this chart. It is just such a random walk. This looks so bearish to me. I don't know. In a vacuum, like if you showed this to me, not telling me the ticker, I'd say that looks ready to dump. Am I wrong, Brian?
I'm not saying you're wrong. I'm not saying anything.
You're not saying anything. It just doesn't look good. It's not, say it's not a Head and Shoulders. Whatever it's printing here isn't some sort of fractal that looks like reversal to me. It just looks dead. It looks absolutely dead. Optimism got pushed back to July. Another reason why I say I'll believe it when I see it on everything regarding Ethereum, because we never know when it's going to go live. We never know what's going to happen when it goes live. We just don't know, Yeah,
I guess we don't know.
Don't know when we know.
I covered up your chart with a meme. I'm sorry.
That's fine. It's just I see these people bullish on this for this reason, and it doesn't happen, and it's like, well, now what, right? I'm not saying it's not going to ever happen. I'm not saying this can't be bullish later
what
on.
It kind of reminds me of is it kind of reminds me of your Litecoin BTC chart, and now I'm wanting to take the other side because it's ETH.
No, LTC BTC looks way better on a actual risk than
looks exactly the same.
No, it does not, dude. Look at this. It's
that's much more capitulatory, I guess.
We talked about all-time lows. This is not investment advice, but I will be buying all-time lows. I will be there.
You want the all-time lows? Yeah.
You're not selling, huh?
No. Look, you know what?
What?
It's a crypto bull market, Josh. It's just, I'm going to treat it like consolidation, and if it all breaks down and goes away and the market is dead and over, I'll just be one of many. We'll just be poor again. It's fine. But if it doesn't, if it goes back up, I'll be happy.
Yeah, but I say this a lot. I can't look at this ETH BTC chart, long ETH over BTC, and say to myself, I didn't know better, because I knew better, right?
It's just that's just a random walk, ETH BTC.
Yeah, but it doesn't.
The fundamentals are all there for me. I'm not selling.
You're in it for the fundamentals. Huh?
I'm in it for the fundamentals.
This is the most bullish I can get a perspective on. ETH BTC is this weekly,
just ranging in the weekly cloud.
If this can break out into June, so I'll say a couple things about seasonality. BTC does well Q2, Q4. ETH BTC has done absolutely abysmal Q3, Q4. So this cloud perspective does not align with seasonality in that it's suggesting a bullish Q3, Q4 for ETH BTC. So a lot of conflicting stuff here, but if you trust the technicals on this and we do get above the cloud, I like 05, I like 07, I like 08, I like 0.1. Those are the levels people are going to be watching. But
shelves. The weekly cloud shelves are some of the most fun targets to go for. So on those big weekly double clouds like Josh is showing on the screen now, where it has that plateau on the top, that is usually a fun target to go after as it marks up. Because it co-aligns with prior levels that were hit, just the way those kind of balance out when the cloud draws itself.
Right. So we're currently still in the cloud. We got weeks to get out of this thing. This does align with the fundamentals of EIP 1559, which probably won't come till December. Let's be honest here.
December?
Dude, they've pushed back.
I thought it was June now.
They've pushed back everything all the time, always. What gives you the belief that it's actually going to be on time?
Well, that would make me sad.
You know,
That would make, I wouldn't like that.
Fool me once, right? Fool me twice. Fool me 65 times. So, you know, I'm happy for them when it finally gets implemented. But yeah. So that's ETH BTC. I'd still much rather take that LTC BTC trade. Let's look at what about ETH LTC? That's a pair no one's ever looked at in their life, right?
Oh, we've looked at it on this show.
Would it be LTC ETH?
We have looked at ETH LTC on this show.
Hold on.
I would almost even say it was recent.
Really? Mm-hmm. I feel like, oof.
It's pretty brutal. That's LTC over ETH.
Right.
But that goes back to 2019. That's pretty.
2017.
Yeah, but like that, the downtrend is like not like obviously ETH outperformed over years, but in lower time frames, LTC may look okay.
Kind of looks like a.
Why are we talking about LTC every week on this show?
Because it's a good trade. And look at the setup, dude. Like, I'm a technical trader. I don't care what it is, right? Like, let's be real. I don't care if this is hog dung, you know? Like, it doesn't matter.
You remember when Meltem tweeted at the very bottom of ETH in the bear market, and she was like, I talked to one of my Wall Street friends, and they told me the ETH chart is fundamentally broken. Something like that. Back when it was like $80, it's down 95% or something crazy. And it was like the absolute bottom. This LTC chart reminds me of that. So probably means it's going to pump like crazy. So it looks fundamentally broken.
You know, obviously LTC has nothing going for it, but that's not the point. That's not the point. Nobody cares, right?
Yeah. So what I do want to talk about is the Dixie. We talked about the, levels to be worried about. 92.80 was kind of the, I think I mentioned it as my big line in the sand, but the 200-day moving average, something I really wanted to pay attention to. This is a concerning chart. Chart.
I looked at it Thursday as well. It's
it breached through the 200. It's in the chop zone of like the prior consolidations from last year. And it looks like if it just keeps consolidating here, it looks quite bullish, to be frank.
Yeah, and I think for people who, this is how I think about it. Like, if Dixie's bullish, then it's a risk-off environment. Is that incorrect to think of it that way?
No. Yeah, I think that's fair, I guess, for crypto.
So if you categorize crypto as risk-on because it correlates with stocks, then you can say, Dixie's risk-off. If it's risk-off,
like I have some vertical lines that are worth looking at. December 2016, start of massive bull market. Dixie goes down. September 2017 to November 2017, it's very similar to what we see in the Dixie right now. That's my hopium. However, that was the seventh inning of that bull market. Dixie capitulates down. January 2018, bull market ends, bear market starts. Dixie recovers all the way until March when our bull market kicked off hard. That's when Dixie did like a super whirlwind because of COVID and started breaking down bull market. So the question is, are we in the equivalent of fall 2017, and we got a couple months left if Dixie capitulates down, or are we already in the January 2018 version and the bull market's done? It looks pretty strong, but it looked pretty strong back in October 2017 too. But more importantly, we have several cycle shifts that correlate very well with Dixie multi-year highs and lows.
Yeah. I don't know what to think about it because the correlation with BTC is actually coming off on the Dixie. It was negative 88 and now it's negative 50.
Yeah.
But still, it's not bullish for BTC if that goes up.
Yeah. We've talked about, like what's our six-figure Bitcoin conversation Dixie-wise. And that includes, we might hit 100K if we go down to 86, 87, the 200 month. And then super Bitcoinization, like 80 and 71, kind of all-time low or like multi-decade low Dixie lows is Bitcoin supermoon is breaking below the 200 month in my mind.
People are talking about the $3 trillion infrastructure bill in the comments. I don't care. We spend more on our military budget than the 10 countries behind us. So, what is money at this point, guys? Honestly, what is money?
Yeah, I mean, with
all these deficit hawks show up as soon as there's a Democrat in the office, right? It's magical. Well, they just sprout out of the ground, right?
And too, what we noticed is like the money hitting people's accounts didn't necessarily make a big impact, but with the stimulus, the conversation of the stimulus is what was the impact. No different than Uni. Talking about Uni 3.0 rumors was not, that was all bullish for Uni. Uni announcing all the details of Uni 3.0, and people sold it. Just how it goes. Buy the rumor, sell the news. Very popular, not just in crypto. Let's just go ahead and, crap. I want to talk about Bitcoin, and then we'll talk about Uni. We'll put Uni on our to-do list.
Yeah, I did want to ask you about your cliff notes on the Uni 3.0. One last thing I'll say about Legacy is the gold 30-week rolling correlation with BTC is at a historic low. It's at negative 90% effectively, which is almost an all-time low.
Yeah.
So dumping gold happening real time here.
You have Barry wins.
Yeah. VIX is back up to 21. Don't want to see that if I'm bullish crypto.
Yeah, what's Legacy doing today? Down a little bit, right?
Down. It's down, yeah.
The S&P's up a fraction. But yeah, just kind of in no man's land. And I saw that like GME and stuff was performing well again. I guess they had earnings that were positive from a price perspective. I doubt their earnings themselves were positive, but the stock went up a lot. Somehow GME is hovering at $200, just under it, which is crazy. I don't think that's any longer having real impacts on the market, but probably still freaks people out.
No, it's just bizarro land. There's so much conflicting stuff going on. It's hard to like make sense of it. If like I'm paying attention to the macro stuff and the fundamentals of ETH and BTC, it's like, oh, by the way, on-chain activity for ETH is at an all-time high and continues to push all-time highs. Price doesn't care, it's like so bizarre, right? Like you'd expect this to be so much more bullish if we're seeing all this on-chain activity on ETH.
Bitcoin itself in total no man's land in my mind. It made a series of lower highs, lower lows, but it looks like it wants to recover a little more. It's recovering the medium-term moving average. That makes me think that we're going to continue to chop here unless we clear 57, basically. If we clear 57, then I think that we can mark up back to new all-time highs. But we need to get that higher high to really accommodate super bullishness, which is only $4,000, which is less than 10%. Get a nice 4-hour close above that, and then I'm going to be pretty bullish to move back above into the 60Ks. But I don't have like big thoughts on Bitcoin. Like if you were going to short, maybe between here and 56, if you really thought that we were going to roll over deeper. But again, I'm not overly bearish. I'm not anything on it. What is the cloud telling you on Bitcoin?
Well, I'm a little concerned we're like free floating between the TK lines. Since the beginning of this, we've never, we've either supported on the Tenkin, which is the blue, or we've tapped to the Kijun, which is the red. We've never just floated in between them. So maybe this is just a rollover effect type thing, but I'm not comfortable with that at all. I'm looking at this edge to edge possibility in Q2, which again doesn't match seasonality, but I don't care. I'm going to trade it if it's there. Like 49 to 39. Like imagine that short trade.
Yeah, that would be an interesting one.
Now, does that make sense with everything going on before people comment,
Yeah.
Outflows and blah, blah, blah.
Yeah, the BitBaron noted that there's been a lot of Bitcoin outflow this week. A lot of people that were willing to step in above 50K, much less in the like mid 40s, which is where I think maybe Willy Woo put out some stuff talking about floors in the 44K type of area.
Willy frickin' Woo.
Looking at like on-chain metrics and activity. Hey, he's got his systems just like you do.
I didn't say anything. I just,
just said Willy freaking woo.
If we look at the 4-hour though, this is what I like to see if I want to be bullish, because we're setting up for just a complete reset of the signals. So I'll be more bullish leaning if we can, that's a trade I'll take. If we can break above the 4-hour cloud, that's a clean long entry signal.
Right.
The last one we had was a perfect inverted head and shoulders. It was a great trade that reached its target and then some. That was the all-time high. We talked about that everywhere basically, but that was a perfect, exactly what you want to see. Yeah, so that's what I'm watching here on the 4-hour. This could set up for a inverted head and shoulders right here. That's certainly possible.
Could test off that twist too. Those are always fun.
Yeah, if this is a big if, but if it sets up as an inverted head and shoulders, we're looking at 60 to 63, which isn't like much, but
just new highs, then consolidation, and then markup, hopefully. Let's move over to Uni 3.0. Definitely the biggest news of the week in my mind. They announced details of Uni 3.0, which excited me for the most part. The actual development of Uni 3.0, I really am excited about, because they are changing the liquidity provision structure. So, like, you don't have to do this 50-50 liquidity thing only, where you're, like, spread across the whole pool. You essentially establish these ranges where you want to provide your liquidity. There's all kinds of stuff built into that, like how you can fill limit orders, how you can get tighter spreads, how you can get better fee structure for everyone involved. It's better for liquidity providers. It's better for traders. It's a better design. Seems quite elegant to me. From a news perspective, within that, there's a couple interesting things. One, it's going to enable products that help you manage your liquidity. So we're going to see a lot of DeFi stuff pop up that's purely designed to help you manage liquidity in Uniswap pools. And tokens on tokens on tokens with that. Number two is layer 2. They chose Optimism, so optimistic rollups, using the Optimism framework, which does not have a token yet, so that'll be a big token whenever it releases, because Synthetics is also using Optimism. But Optimism has delayed, as Josh says everyone in ETH does, to like July or something like that for rolling out Optimism. And Uni, we don't know when it'll launch with that. However, Uni 3.0 will launch May 5th on layer 1. And then the third interesting piece of news, I held a Twitter Spaces this week, which, I don't know, it's fine. Just because I wanted to talk about Uni 3.0.
How's that interesting?
Didn't want to do a podcast. Huh?
I said, how's that holding a Twitter Spaces interesting?
No, the experience was interesting for me, like trying to use it.
Okay. Continue.
Anyway, so I just hosted that. I was rendering a video at the time, so I couldn't stream or anything, so I just hosted that. But what I found most interesting was the Uni BUSD license. So this is like a business wrapper that puts a 2-year delay on this Uni code before then it converts to GPL, which is a fully open source copyleft license. Basically, it's like a shot across the bow to the sushis and more than sushi, like all the clone swaps, AMM products, to where they will now have to get creative if they want to try to clone this functionality, because they can't do it with a direct clone and stay viable with the Uniswap distribution license. So they're trying to create a moat through this business wrapped license, which is not really in the spirit of open source software. I guess they're allowed to do it. I don't know what their previous code was. It must have been MIT, because if you use GPL and if it's based on that, anyway, there's some license issues that are weird. But some licenses, like the GPL, you can't wrap it in something commercial. So putting this new code in a BUSD license and converting it to GPL, it's basically putting a 2-year delay before others can take it from you, unless they get creative, which feels like a little too protectionist, but they've got a lot of business interests, so I don't know. Curious if the chat has thoughts about it. From a price... Go ahead.
Is that going to even matter? Like, who cares? You got a business license. They can still take the code, can't they?
They can, but like Uniswap can also try to go after whoever's involved in those projects if any of them are not if they're doxxed or have stakeholders. I don't know. But it just invites a degree of, I don't know, it's just strange. It's just strange behavior, like in a mostly open source world, trying to create that protectionist stance with the license. So I found it interesting. I didn't love it, but I understand it. I understand where they're coming from. Tomanium sounds like something lawyers insist on. Probably so, but I don't know. I think the Uniswap team seems particularly upset at like Sushi taking stuff, All
I gotta say is welcome to the show, Hayden.
That's what happens. It's open source software. That is what you do with open source software.
Now, if I was Hayden, would I like it? No, but that's the name of the game.
Yeah, I think one of the things I'm interested in is I knew one of my advantages coming into the space was my history in open source software and seeing these things play out. Like people have copyright over their code in the brand name, but they don't have protection over the usage of code when you're using open source software. Other than if you use a copyleft license, you're forcing people in the future to also have it be open source, so they can't wrap it and make it commercial. And I knew there were going to be a lot of fireworks in terms of sourcing and cloning and all this stuff with crypto stuff because I'd seen it play out in the web world, and now we're seeing it play out in the web world or in the crypto world, and the stances on them are a little different, which I've found interesting. Although talking licensing is going to be boring for almost everyone. The price of Uni went up 9% as soon as it was announced, and then faded quickly. Eiffel Towered the low time frames and then dumped on the high time frames. And now, to be honest, to me, the Uni chart looks like utter garbage.
I still think it's fine.
It's fine. It's just not good.
If you believe in the DEXs and the fundamentals of the trading, then I think it's fine. Let's be real, the governance tokens are worthless, but that's not what we're talking about here.
Yeah, one other thing on the license, Bobody said, can you just clone into another programming language? I don't know how that works. My answer to that is probably. You can get away with it if you essentially put it in take the same type of logic, put it in a different language. It's not their code, it's original code in a new language, and you'll probably get around it. So yes, I think people will get around Uni v3 licensing to take similar concepts. It's not like they patented the idea, which would be a different level of protectionism. Josh, you have to tell me what you think about ZRX because you have it up.
Well, we were talking about DEXs, and all my DEXs live in Texas. Is that a thing? Anyway, it doesn't look great to me. I don't know. All this DeFi stuff looks like it wants to retest the 200 to me, which would be devastating.
Okay, we're taking your screen away because this is against the narrative.
We're taking your screen away. I don't know. It just doesn't look... everything just looks like a descending triangle or M double top to me. I think the big tell that all this was a failure was when DOT failed to do anything. Because DOT had probably the best setup of all of them, depending on what you want to consider this as far as DeFi or not DeFi. It had a setup and it just didn't, it was a fake out breakout.
DOT is too expensive already.
I agree. DOT's garbage and I would never touch it. But the point is, if there's a sector standout and that standout cannot do anything bullish, then... there's clearly a top at the moment as far as that's concerned. Lynx, though, still looks fine to me. As much as I love crapping all over Sergey and the selling.
Link is just like this forever channel of boring upness.
Yeah, what's wrong with that? It looks fine.
Nothing. I wish I was a Link pre-saler. Everyone that was in the Link pre-sale has it in their Twitter bio. And now they're like a Pepe with a Chainlink Oracle logo in their hand, and they're just
Lambo.
Hello, I'm hilariously rich. I am Chainlink master. Chainlink pre-sale in my bio. I'm the only person that made money in the bear market on altcoins. Look at me.
So back to the technicals, the $20 level looks good to me as far as adding to my own bag. If it gets that low, I don't think it will. It just looks super strong to me. Just looks, I'd rather DCA into this than anything else. I
I'm
did
not-
buy Uni the other day. I am holding AAVE, so I'm slowly turning the corner on some of this stuff.
Yeah,
I
I'm
don't know,
looking.
DeFi. I want to buy blood. I said this somewhere. I want to buy DeFi blood. I'm ready.
You said it on here. You said if you got AAVE 275 or something, you would go all in. That's what I
AAVE
roughly remember. And it's had a big, pretty nice recovery today. I think AAVE looks, man, like the fact that it swept 300 and went back above was bullish, but like AAVE just hasn't confirmed anything for me. I think when I get excited about AAVE again, which I love AAVE, you know, Stani is apparently my clone, where we are the same basic white guy according to most people on Twitter. But I'd like to see this diagonal play out, recapture the 20-day, probably all in the same place. So even though it's buying it higher, I feel like if I could buy AAVE at like basically 400, like I'd play it 400 to new highs, you know, and that feels safer than me than trying to buy 300 to 350 and hope it goes up. Because on the downside, unfortunately, like AAVE could go to 200 if it breaks down, you know. That's the next like big block on the downside. So I don't want to buy 350, get $50 better pricing than if I bought 400. But the downside, it's hard to know exactly where am I going to make my stop other than maybe new lows, because it has there's a gap down of about $100. There's no guarantee it needs to hit, but that's the fear that I have. If the market breaks down severely, that it'll just go really quickly to that breakdown, and I wouldn't enjoy that very much at all. Versus if it gets above 400, it's breaking the diagonal, it's breaking the 20-day, it's making a new high, and I think it can make new all-time highs.
Okay.
How do you feel about that?
So I'll be buying one of two things: either the 200-day moving average, okay, or lower. I'm happy to buy all the way down, or which is the 200-day moving average is at 220, by the way. Or I'll be buying this daily cloud breakout, which is certainly possible and may align with your 20 SMA or whatever you were looking at there.
Yeah, it does. It would basically be that cloud breakout.
So if this breaks out, we're good to go on the daily. Otherwise, I'm buying the 200-day moving average.
Yeah. Is that good enough to be representative of other DeFi stuff for you? Like when I look around, I feel like it's just a matter of which ones have a higher percentage recovery today, and does that interest me in terms of whether I'd want to own them. So like Sushi's recovering quite well relative to others. Matic is recovering pretty strongly. Alpha is recovering strongly, and Alpha to me like never really fully broke down, so that one still interests me. I still have not had a position in it. And then it has these gigantic moves. I just feel like Alpha is going to go into price discovery, go higher, and I'm going to feel sad if I don't have a position. So that's what I'm considering. Like I said, Curve is the one I've already taken some position in. Ren I got out of at like $1.06 when I felt like it was going to break down, but it's also recovering better than Mini. It hit this prior horizontal almost dead on, and then it's recovering up. So it looks better, but all of these look like they could just kind of fade down and chop around for a few days. I'm just not convinced of the recoveries yet. How do you feel?
Yeah, I think the bottom line is none of these charts, BTC and ETH included, are not screaming any entries at the moment. We're getting closer, for sure, on a lot of these charts. Like the 4-hour BTC chart, that entry would look good. The daily AAVE chart we just checked out. If Link breaks down, like if any of this stuff continues to break down, I think it's a good like DCA. At least for me, that's what I'll be doing. I'll be adding to all the positions, basically.
Yeah. The chat wants to know about my Rook capitulation, which is, I guess, their fantasy that I capitulated. I did not. I built the majority of my Rook position sub $100, guys. So sorry.
You're the biggest Rook person that I know, though.
But they love to ask me about it and troll me about it. It's like every tweet, I just get Rook comments. But I would compare it kind of to AAVE, like if I was looking for new entry. It looks fine. It looks like it capitulated to me relative to like the recent time frame. It went down 70% from its high on FTX listing. But it looks like it capitulated on that. But it needs to recapture maybe 350 to 360, make a higher high. All those are like, it continues to get more bullish as it goes up. I know that sounds dumb, but certainly over 360, even more so over 400. Then I think you can test like 500, 600 type numbers pretty quickly. It doesn't matter whether you want to try to catch that as a knife or not, what you want to do, how you want to play it. I personally think it's bottomed, but I'm a bag holder. Don't trust me.
You're a community member at this point. You're bullish on that, but you're not bullish on LTC, BTC? Amazing.
Yeah.
Absolutely
fundamentally,
amazing.
It's different.
Absolutely amazing.
Absolutely amazing.
Oh, somebody wanted to see pitchforks.
Why do y'all do this to me? We're almost done with the show. We got 50 minutes in without a pitchfork.
Hey, we didn't talk about NFTs today. At least that's a win. 2-year MA multiplier. We basically tapped the ceiling but couldn't break through, which is better, actually. Right now it's at 69.7.
Take its time before it breaks through.
Right, and if you've never heard us talk about this, historically this has picked the bottoms and tops extremely well. And how this works generally for the bull side of things is once this breaks the 2-year moving average multiplier, again, currently at 69.7. Once it breaks that level, we have 3 to 4 weeks of absolute madness, euphoria, FOMO, before the actual move is over. So that isn't to say this can't go to like 250 or 500K. It's just more of a timing element where once we break that level, there's really no going back. As far as, we turn on the afterburners and just go, and that's it. So it's good. I actually like that we slowed down here because that just means we're in it for a longer trend. The 200-week moving average heat map is getting hotter as far as the speed at which the 200-week is moving to the upside. But it's not topped yet, which is another good sign. We have more left in the tank. People love talking about stock to flow.
Is stock to flow? Is the Pi cycle kind of like stock to flow? We're getting spammed about the Pi cycle.
No, I'll talk about Pi cycle in a second.
All
Chill,
right.
chat. Chill.
Okay.
Stock to flow. I talk about it. It's like TA for some people. Some people think TA is a joke, but they look at it because other people are looking at it. I think stock to flow is a joke, but I look at it because other people are looking at it. So currently, the stock to flow is predicting 83, 84 by May. Whatever, Okay, it is what it is. Yeah, so there's that. Whatever. Pi cycle, everyone's favorite. This is like the sniper of all snipers as far as tops are concerned. Pi cycle has picked all 3 tops previously by 3 to 4 days. That's unheard of as far as accuracy. So right now, by the way, the Pi cycle is that 2-year MA multiplier, or the 2-year, what is this? 350 times 2? That's what, 700?
Yeah, 2-year. Just call it 2-year.
I consider it the 2-year MA multiplier. Anyway, so it's that with a 111 cross, MA cross. If you haven't seen it, check it out. Look into bitcoin.com. But it's getting closer and closer and closer. And we see this frequently when we get obviously closer to the top. It doesn't mean this stuff isn't like super imminent. We had this like gap closing all of 2017 for several months as we made its way up the price levels there.
It looks very close to me.
Oh, it is. It is probably within 2 weeks of touching at this point.
Well, that sounds sad.
So that's probably the most concerning.
So here's what I say.
Everything.
The Pi cycle top indicator is garbage. How about that?
Whoa! Whoa, dude.
Look, if it doesn't fit my narrative, I don't want it.
Look at the back testing, man.
Oh, there's like 3 cycles. Who cares? It's just arbitrary moving averages.
Okay, all right. So yeah, if that crosses, I'll be concerned for obvious reasons. Another indicator that doesn't say we're at the top yet is the UTXO age chart. Historically, again, the past 4 all-time highs have been when 50% of the coins have moved within the past 6 months. Right now we're at 36% probably total of coins that have moved in the past 6 months. So if this creeps up to 50, then we're in trouble based on backtesting. So everything but Pi cycle basically says we're getting close but not there yet.
And the Pi cycle is wrong.
Okay.
So that's that. Q2 is going to be great. Don't you worry.
Here's your favorite, the pitchfork. We're at the top, near the top.
I almost just went to the exit music before you got the pitchfork on.
Got to get it in there, Brian. So how this works is you pick 3 points that are a rate of change representative of future movements. The points have to be extreme highs and extreme lows, people. They can't be... If you want this to be a true pitchfork, it has to be extreme highs and extreme lows. We're still within the pitchfork. Another part of how this works is the median line wants to act as a magnet for price, currently at around 36K, well, 30K, whatever that is. I don't know. These things are slow if it's big and if it's lasted a long time. So we're currently basically nearing towards the overbought diagonal. Once again, saying we're near the top, but we're not there yet. And then lastly, for ETH, that pitchfork just completely overblown as far as the expectations on that rate of change. So you're either throwing that one out the window or you're changing the rules a little bit as far as what to expect.
Throw it out. Get it out of here. Look, ETH is still going to go to 2,500. I may lose the bet, but it's going up.
It's going to be some tasty steak, let me tell you.
Tasty steak. You just don't understand, Josh.
I don't understand the fundamentals. Huh?
That's right. All right. I guess we'll leave it there. Thanks for everybody being here with the chat. It's been fun having you. Thanks for dealing with me. I'm just being a mess.
Hey, I appreciate your options knowledge,
Yeah, hey. This show's all about options. We'll talk to y'all later. Hey, go to ledgerstatus.com/matcha. Make a trade. And rate us on iTunes. Thanks for being here.
In a house of cards, I feel the breeze wound so